Welcome to a new update, and today we're going to cover the results of the Fed meeting as Powell has been speaking yesterday, and the actual result is that we're going to get 75 pips and Powell remained hawkish. That's what we're going to discuss in this short update today, but before we continue, make sure to hit that like button, subscribe to our YouTube channel as tonight at 7 p.m. we're going to cover everything that Powell has been saying, and including that we are going to cover PMI data of today, and we're going to discuss the unemployment data from tomorrow. Also, if you want to see our content, we have got a free trade letter. 3 times a week you get the mail in your box, and it's including macroeconomic news, trading, investing, and more. Check the description. Also check the description if you want to join our premium membership for free for 1 month. You have to sign up through Bybit. Now, when we're looking at the markets, we can conclude that yesterday we've got what the markets were pricing in, which is 75 pips. Also, the markets are pricing in another 75 pips rate hike in December and another 50 pips rate hike in Q1 of 2023. So based on that, the market is very bearish in sentiment, and we also saw that Elizabeth Warren, Biden, Katie Woods and more people were shouting for a pause on the actual Fed interest rate hikes, and also a whistleblower was saying that they most likely are going to pause. Yesterday Powell was speaking about this, and he said a few things in between lines, just barely, where he was stating that on the next meeting there is a potential case that they're going to discuss it. So other than that, he remained hawkish, but he has to if he wants to sustain his policy that he wants. If he says right now that he's going to adjust the policy, everything will change. And they know that the markets are going to be economically bad and the data will be bad overall. But he can't say it during his speech. So the thing is that during the actual post, we saw an update on that they're going to discuss it. So we see the first slight signals. And that's what we're seeing in the markets. But what are the markets going to bring? Let's hop towards the charts. Now, when we're looking at the markets, there's a few things that you should be focused on. First of all, we are watching the yields, and the yields are still consolidating in these ranges, and they were bouncing up because Powell remained hawkish. Initially they dropped, but now they're bouncing up, showing strength because the markets are pricing in continued Fed interest rate hikes because Powell has been saying that. Also, if we go towards the 2 years, we have actually been seeing a new high. It has been going mental. We are not sure whether this is going to continue, and that's all depending on the data that we're going to get quite soon. But we do see that's going up. DXY also going up from the crucial level. We saw a reaction from this block, but we are breaking out to the upside here. And although we see this data and we see the markets reacting in such a way, we are also seeing that Bitcoin just remains sideways. So we are waiting for the actual US Open to take place here, and then we're going to get the actual movements. Also, when we're looking at important data to watch for the coming few days, the ISM Services PMI is a big one for today to keep your eye on. As yesterday we've had the Fed, and also earlier this week we had ISM Manufacturing PMI, which came out more positive. Job openings the same. We are looking at Services PMI today to be at 55.5. Anything lower is good for markets, anything higher is good for the currency. Tomorrow, as I have been discussing, is a big day again. We got hourly earnings in, but unemployment rate is the big one. What are we looking at with the unemployment rate? Anything above 3.6 is great for markets. Anything below is terrible for markets and good for currency. So what are we looking at? We are looking at a case where Bitcoin is now swimming around the range resistance, right? So we are ranging here at the resistance. DXY and all the others are still showing strength, and data is most likely going to kick in which the trend remains to be downwards at this point. What am I looking at when it comes to the markets? I think that based on Powell's reaction, we get a slight reaction to the markets in a way that I'm looking at a retest around 19.6 still as a possibility, or at least a sweep of 20k. That is the range that I'll be looking at for longs, or if we break and flip 20.35, that is another trigger for me to start looking for longs here. Okay, so I'm patiently waiting at this point to see what the markets are going to do. When we're looking at indices, we are also seeing that there is weakness at this point based on the fact that, simply put, the currency has to show strength at this point. So we are waiting for the economic data, and based on that plus US open, if economic data comes in positive, I'm going to look at longs here, because I think that either the payrolls of Friday or we're going to get midterms next week and CPI kicking in. Those are going to be the reversal, and then the market starts to trend up again. Anything that is going to happen to break 20.3 and 20.6, then I'm reversing that thought process, but I think the buy the dip season is right now. I hope you have been enjoying this small update on the markets. I'll be back later today with a live stream at 7 p.m. to cover everything that you need to know. Make sure to hit that like button and subscribe to this YouTube channel, and check out our free trade letter, and I'll see you again tonight at 7 p.m.